Okay. Let's see Y. X, the X trade. We're only 3 deltas. Okay, let's check it out. Let's see. Markets just opened. Their markets just opened. So let everything for the first minute do what it has to do, because markets have a tendency to just vacillate, let things settle down for a minute. Let's go to SPX. Let's do that. Go to SPX. It's up 19. So SPX. Okay. You know what? I got to get out of FXI. See if it'll get me out. Okay. So FXI. We're out of that one. Let's see what we did on FXI. Because that's just after too many. So 99, 60. Okay. It's not like the best of trades, but oh well. So we did about a little over 30% on that. And FXI, EEM, I'm seeing nothing on that yet. That's on November 15th. EEM. Okay, we're at FXI. Okay, SMCI, TLT, that's a free trade. VIX, I don't care about. The X trade, let's see what X is doing. And that is only really 2 deltas, so I'm not going to freak. That's just a volatility thing. Why, markets are doing what they're doing is because of volatility. But in terms of delta, we're still in the wheelhouse of delta on X. Yeah. Let's just double check. Let's see. Yeah. We go to, yeah, we're still in the midst of that, of the wheelhouse in that. So we're not freaking on X yet. XSP, that's the only one that, again, that's the one that's been hurting me, but I don't think I can move. Yeah, this is 13. See, roll expirations the 14th. Yeah, we're not going to be making any money on that if we moved it to the 14th. And today is the 11th. I was thinking at the very first sign of this going down, I would move it just to get rid of to get some credit, get just a few bucks of credit off of this. So, anyways, that's what we have. SPX. So that's our inventory. SPX is up. VIX. Oh, VIX is up a tiny bit, 2%. That's interesting. And the cost of bonds, the cost of money, which cost of money is considerably going up in price. If you see, this is down 3 ticks, but it's basically flat. If we go to TNX, which is the yield, I should be able to see the yield. Yeah, because that, for some, why am I not getting anything on that? I should be able to see the yield in TNX. Yeah. I should be getting, why is it only going back to April? Because that should be, would be dollar sign. Yeah, TNX, CBO interest rate, 10-year note. Interesting. So, I don't know why I'm not seeing it over there. But anyways, let's look for opportunities. Oh, wait. Looking at our inventory. Let's see what other trades we had that never got filled. All symbols. and see if those are still available to us. That other one, let's see, FXI was the only one. We tried to get it filled last week for around 64 cents, but we got it filled today at 60 cents, which is great. We bought it back for 60 cents. So that actually worked out pretty good. Yeah, there was no other orders that I saw. And now, right, again, because the volatility just is basically flat. We're going to go to, let's see if there's anything we can sell in terms of volatility. Options volume, NXC. I've never done Next Gen Energy. 99.78. Okay, 7%. Was there earnings? Next Gen? No earnings, no dividends. Something's up. Wait, let's see. Yeah, interesting. But and it's only 200,000 contracts, so there's no real liquidity there. But let's just take a look. Doesn't look like there's any liquidity. Wait, let's go back to that. Next Gen. NXC. There we go. Yeah, so there's nothing there. There's no liquidity. I mean, you could tell by the granularity of the strikes. Yeah. 19 Delta has nothing. So, anyways, I was just looking to see, hey, what goes on with this, just in case. So, just to see what a straddle would look like on that. It should be, that's a 43 Delta. So I would have to make it more like an iron butterfly if it did. 82, yeah, 648. There's nothing there. Okay, see if there's anything else to sell. We got Tesla. Tesla looks sellable, and it meets all the criteria. But what could we sell if we did Tesla? If we did it, how could we do it? Because Tesla has the liquidity for days. If we went 39 days, I'd probably have to go out to January because 39 is cutting it close. And for a defined risk, it's really close. So if I did 17 deltas on that, just sell Tesla. Again, we got more room to the upside in terms of, and let's see what we got in implied volatility skew. Okay, so it's trading at 348. So 200 or $100 up at 450. 745. So 350. Let's see 340. It's at 347, 247. And what is the price of there? So there's definitely some upside on there. Yeah, there's definitely some upside skew in that. Let's take a look at the mountain. Yeah, so this is, it's upside for days that literally, you went up here, you'd be down to about $2,000. You went down here, you'd be down about 900. So if we go, let's go back to the table. Go 10 strikes out. So it is trading at 347. So let's see, 347. 1, 2, 3, 4, 5, 6, 7, 8, 9, 305, 300. So if we went to $40 either way or $50 either way, be 925. $50 up, 14. So yeah, there's more, and that's an implied out there at 71. And the implied down here, 64. So yeah, there's, it's definitely, So anyways, looking at that, if we were to sell Tesla, let's take a look at the chart and see what Tesla's doing. Wow, it just spiked like crazy and implied. Look at that gap. thinking that Tesla could go ahead and either range here or either move around, kind of either range or go down a little bit. The thing is implied volatility is going up. It's just going through the roof. This thing can move $26 either way on you, doubling the higher the ATR, which is 21 ATR, or you could go 44 ATR. Anyways, this thing can easily move, we'll say $26. That this thing can move away from you. So if this thing can move $26, I wouldn't spend $2,000 on a trade that is it would have to be defined risk. I wouldn't spend $2,000 on a strangle just for that. So I went 290, 285, 450. So I'd have to go 10 because the granularity is not on the upside, and I want to make it even in terms of the risk. 290, 280. If I were to do Tesla, 270 out of 727. It's not. I mean, it fits all of that. It fits. You're getting around a third the width of the strikes. You got a 74% chance of making half of your money. You're getting $5 a day in theta. Delta and gamma are pretty good. It's a little bit delta short, just a little short. You're not really getting destroyed in terms of gamma. That 70% chance of this making at least a penny. If it went and skyrocketed to the upside against you, you'd be down 179. If it skyrocketed to the downside on you, you'd be down 247. Okay. So, you are delta. I mean, you're a little bit, you are, let's see, you are a little bit, just a hair bit on those deltas, delta, you're just a little long deltas. I think I said delta short. You're a little long deltas on that, because you're closer to the lower strikes. But that's $10 right there. $10, 278, and so again, like I said, we're looking at a $26 move on this thing. That it could move easily against you $26. So if it's at 345, we go to 320. You'd be down about $100. Let's see, about $100 if it just moved against you, and if it moved to the upside, about $20. See, 345. So about 365. Now you'd be okay. You can move those deltas around a little bit by moving this down to the 280, 270, 290, 280. Therefore, you're a little better. You're only getting, you're getting 233 or 767. So you're cutting down that third the width of the strikes a little bit, but you're getting just a hair bit safer. So, and remember, we're looking at Tesla having the possibility to move on you. If it did move on you quite drastically, you would have to move your credit. That would increase your buying power. It would literally damn near double your buying power, a little less than double. You're only getting 3, so you're only getting $100 more, doubling that buying power. Let's see. You're only getting, if you had to move this thing down, 450. There we go. If you had to move this thing from the 450, say you had to move it to 440, buying power would significantly have to go back up, and you're getting less for that. So it's not really like, it's an expensive trade. I always look at that as if this thing is going against me, I'm gonna have to adjust one side, and if it goes against me to the upside, I'm good. But if it goes against me to the downside, I have to adjust that buying power. So if it went up to the upside and say like to the 285 or something like that, if I move this up to 290, I'll be getting a little bit more. The buying power would almost double. I'd be getting about a good $100 So, that's just one thing to be very careful of. So that's Tesla. I'm gonna keep Tesla in the wheelhouse just in case. I mean, I don't like it like greatly because of the fact that how much money I'll be spending to adjust this. And like I say, every trade I get into, I always have to adjust. It's not like I can't avoid it. You're gonna adjust. It's just Tesla's very expensive. It is what it is because it's Tesla. KRE. Okay, KRE 59.35.7. It went up 4%. KRE does fit our definition of the king and the queen. The king, it's got 1,000,007. It's a million, 1.77 million contracts, 54 IV rank, 35 IV index. Now let's go to the individual IVs, which is the queen. 41, 43, 35, 36. It's just pretty nice and high. If we did this, we would definitely have to go out. If I went out to the December 20, I think that's where I'll find the liquidity. Let's go to make sure the king is out there with liquidity. Yeah, I'm not seeing any on the individual on that month. I'm not seeing a gang load of liquidity where I want. Because if I went out to the 16 Delta, well, you've got 15 contracts here. Go out to the 15 Delta and you're not going to see anything out here. Barely. 13 contracts. Well, we'll say, yeah. So if you went out here and you did a strangle 109 of $2,000, that's not really, you're only getting $9 credit on $2,000. Doesn't make sense. There's no liquidity out here, so it wouldn't really, there's no contracts. No bid out here. Yeah, there's nothing out here on that. So let's go ahead and see if there's something in January. See if there's, hey, Hotep there, Brother Will. We're going to see if there's something in January to, if there's any, I mean, it's just no liquidity there. So I have to, I want liquidity. So we'll see January and KRE. See, there's liquidity out here. Let's go to the 16, 14 Delta. 16 Delta, there's 106 contracts there. In order to sell KRE, 16 Delta. Yeah, see, there's liquidity out here. So we'll go to the 480, that's 17. 1632 of a, oh no, this is Tesla. I thought I was on KRE, my bad. I was on the wrong one. I'm sitting here going, wow, that's a lot of contracts in KRE. Okay, there we go. Trade, KRE. Yeah, because this didn't have any liquidity, yeah, in the December. So let's just see if there's something in January on KRE. Yeah, I was freaking. I was like, man, there's a lot of contracts for KRE. See, there's only 2 in that. There's nothing out here on the 16. Let's say 19 Deltas. See if we went 19. Yeah, there's nothing really out here. Again, 194 of a 205 or $2,000 no, I would not. But it's like, how much buying power are you tying up for how little money? There's nothing out here. I'm just doing $5 condors to see if there's something out here. Nope, nothing on this trade. You'd be wait if you did it 116 to 384. That's close, but the thing is there's no liquidity, so nobody out there to make that trade, which means you can't get out. That's the thing. If you need liquidity to get in and you need it to get out, that's the key, is liquidity. That's the king. There's number one. Plains All American. I've never heard of this. It only has 182,000 contracts. There's not going to be any liquidity on this. PAA. Let's go to 39 days. Go to the 16 Delta. There's the 15. 0 contracts. So the 12, 15 Delta. There's nothing out here. There's no options on this. Okay. Let's go to the next one. So the only one so far looks like Tesla be okay. XRT, so it's definitely traded. So I know because I've traded it before. Let's go out toward, I like to go, let's go and see if there's anything in January. Okay, there's nothing in January, no liquidity. Let's go, but I've done XRT before. Maybe the December contract might be a little bit better. Not seeing anything in XRT. No liquidity. Even if we went to the 20 delta, there's only 3 contracts here. And if we went to, say, the closest to 20 would be this. It's only 3 contracts there. 159 of an $1,100 buying power. There's nothing there. No liquidity. And it's too. You're not getting paid for the risk because you have to put up 1,100 to make 100. It's just not worthy. SMH. That is definitely liquid. That's purely liquid. Thing is, okay, we've got 39, 35. It's only up 0.1%. Let's see what SMH looks like. Let's go to liquidity, December, bam, and let's wait for it to populate. Yes, we do have contracts. Let's go to the 19 delta. It's right, or we can go to the 15 delta, even though there's only a few contracts on the 15, 14 delta out here. So we would be $6 on a $2,800 is not enough. Even if we did an iron condor, which would be 25 or 275, 280 to the 225, 220, 154 of 346. It's much better. We let's take a look at this. We are delta. We're still we're a little long deltas, just a little long deltas. So we're a little closer to that in 31.25. Yeah. I mean, we could go to the 24 delta, 19 delta. That's evening up our delta. So that'd be the 235, 230. We would be getting about $2 over the 3. So yeah, it was much better in terms of we're outside the expected move. So we're closer in deltas. Thing is how much would it cost us to adjust? That's all what I look at. The only thing is that's only a 54% pop probability of profit, 67. So I'd move these a little bit just in case. Just in case. We got a 59 probability of profit, $3 a day in theta. You had a 67, 68% chance of making, even though we're a little bit short deltas, okay? Just a hair bit short deltas. If we looked at our curve, the mountain, because it's all about keeping him on the top of the mountain. Okay, it's kind of close. If it jet up there instantly tomorrow, you'd be down $82. If it instantly jetted down to the bottom, you'd be down 85. If the market just jetted to the upside, we would have to move to 230 to the 245 or 235 to get some credit back, and it would increase our buying power to 732. We'd only be getting on that buying power. Let's go back to this 170 to about 2 cents. So we'd be getting $100, but it would cost us more in terms of buying power. It would increase our buying power. So we'd only get $100 on that, but I kind of like this trade a little better. It's not the best because the probability of profit is very, very scary. When I say scary, I like it in the 60s, 70s. So if that's the case, instead of a 170 credit from 171 to 185, I'm gonna chance it. I'm gonna go to from 170, 185. I'm gonna go to 180 and see if they would fill me. Even though chances are they won't fill me. Just look at the spread between that. So I'm gonna do this just for the sake of doing it. It does take up about $300 of buying power. But the thing is, even though it takes up that buying power, I'm trying to get as much credit as I can, even though that I've got it so far out of the mid, it more than likely won't get filled. We'll go 180.80. Even though it more than likely won't get filled. Look at the credit moving around from 161 to 180. So it's definitely moving around on us. We're gonna go I'm gonna go to the upside because this look at that. I mean, that price has definitely moved around a little bit because it was at 180 at one time. So you know what? I'm gonna do this just for kicks and giggles because I want to see if it'll fill. Get a lot of credit for something, and then I'll move it back just to see. Let the market settle down and see what happens. That's the only one that I see. XLU 36.15. Nope. And if I did this in terms of the one we just did, our you can go into the individual strikes on the SMH. Okay, let's clear this. On SMH, we're looking at the December, trying to get in December. Look at the implied, the individual implieds are at the 33, 34%. We've still got a 35%. So the strikes are pretty high implied volatility on the expiration. So it's okay. I don't mind this. I don't mind this trade on SMH. I've done it before and it came out all right. TLT is a free trade. We don't have to do anything with that because we just let that sit because we've already made our money on that. If it goes down and goes into our wheelhouse, then it's just extra bonus. XLU. Let's go to XLU. Let's see. XLU. No, that was the one. Look at that. 18, 17% implieds in those. So it's not good. 36 rank. If it were like IB rank was like 99 or 100, and this was still down to like in the teens, I'd say, okay, maybe. But having a 33 and then the teens, it's not worth it. It's not worth it. You're not going to get paid for it. Metals, that's down 4%. There's no way I would do that. SoFi, which I think it's a what is SoFi? That's a payment thing. Payment. Let's see what that is. Research news, just to see what SoFi. I think that's like a payment thing. I think it's sensitive to your blockchain. Blockchain has been ridiculous through the roof. I know that's a payment. Yeah, provider of financial services. As members of Borrow Save. Yeah, SoFi. Yeah. And then that's your Robinhood banking platform. SoFi Protect, all that. Yeah, that's what I thought. Yeah. Okay. It's a payment thing. It's a PayPal. For some reason I thought it was a blockchain thing. But anyways, let's take a look at it. Let's take a look. 39 days is close. I mean, I like 45 and plus, but let's just see what the 20 Delta Strangle would be like. I always like to go 16, but since it's 20 and 11, 20 is closer to 16 than 11. Just by $1. But let's go to the 20 Delta, $65 and 216. It doesn't give you that third that I'm looking at, just in case. So if I did that, if I went from the 17 to there's a lot of for this particular stock, there is enough. So if I did a $3 wide, 11 to 8, it still has contracts. It's not the greatest of trades. You're only getting 47 on 234. So definitely not a condor. I would definitely have to, if I did this, I'd be doing a strangle because you're cutting off your, it's costing. So let's just see. You know what I'm saying? If I did this, I haven't traded SoFi before. And, look at this. Just ridiculous to the upside. Chances are it does have a chance room to go to the downside. So I take that in consideration. Implied volatility is starting to go back up again. So, where it's at right now, it's not the best yet. This thing can move $1, say easily $1 a day, say $1.10 in the last, and I always do that. Go to the curve. If I were to do this, if I went from 13 to 20, I'd be down 27. If I went to this 13, say 1388, about 14 to 15, I'd be down about 34. So this thing, I'm not getting paid enough for it. If it jetted to the upside, all of a sudden tomorrow I'd be down 92. If it jetted to the downside, all of a sudden tomorrow I'd be down 47 on the downside, which means that it does have that delta, even though we're pretty much delta neutral, the gamma, the frown, you lose real fast if this thing moves. You're going to be losing a lot of money fast. You do have a 68% chance of making at least a penny, $2 a day in theta, 79 or 80% chance that this thing is going to go and make you at least 50% of that 63 per contract. It's per contract. But again, okay, and you've got 63 to 66, so that's pretty tight. 3 cents right there. Problem is I'm not getting paid enough for it. If I got like 80 or 70 or 80, say 70 or 80, I'd put this trade on in a second. but we're getting just a little bit too less for the gamma risk, because you got a $20 risk on this thing. Should this thing move a dollar? Remember, I said it has the propensity to move a dollar in the last 21 days. Look at where it's at, 87 cents. So chances are this thing will move that dollar, and I don't want to lose. But I want to get paid for that risk of the gamma, of how fast this thing can accelerate. I want to get paid with that. So let's keep moving on. And those are the ones that we could sell volatility to. Let's see if there's anything else. Riot, blockchain. You know why? Because Bitcoin is through the roof today. That's why that thing is up 14%, because Bitcoin is just ridiculously it's like everybody's saying that is the currency of, from now on, everyone will be using Bitcoin. That's why that and ARK Investor up like crazy. What was Bitcoin up, like 5,000? I mean, it's ridiculous. Hold on for 1 sec, Brother Will. Hold on for 1 sec. Second. Yeah, I got my fireplace fixed Friday, and it's getting cold, a little bit cold. I mean, it's not terrible. It's colder for folks that live out here that are used to nice and sunny weather and warm weather. It's getting a little colder. I was thinking about turning on the fireplace again, but it doesn't emit the heat. I think it's more for cosmetics. It's not giving me the heat that Anyways, let's look and see what else. Riot is through the roof today. Why? Because Bitcoin is through the roof today. I mean, it's ridiculous. It's just insane. That means there's so much speculation. And again, I call that the Donald Trump stock, because it's a lot of speculation. If we look at Riot's chart, it's just, that's just, gap after gap after gap. That's the Trump bounce. Because everybody's saying that he's pro Bitcoin, in the whole 9 yards. That's all that is, speculation. I never traded that stock. I don't trade. That we're looking at what IV index of 107, even though it's way up there. Chances are you're not going to get paid for the crazy. If we go to Riot, and if you do, you have to definitely look at the downside and not the upside, because chances are this thing will bounce through your strikes just because of how ridiculous it is. We can go to the 67 days out. Look at these contracts. 67 days out. You've got so many people that bought in the money contracts. They're looking at this thing You got, without a doubt, 2,000 contracts here, 1,000 contracts. Somebody is looking at this thing at least staying over $15 in the next, and chances are they're looking at this thing hitting $20. Riot hitting $20 in 67 days. That's the Trump bounce. You got 4,000, 5,000 contracts out there. This could be a spread. They could be selling it out there. They could be selling that, but that's insane in terms of and this thing has the propensity. Let's see what it can move per day. It can move $1.40 in a heartbeat. That's 10%. Why? Because it's up 15% today, and it's already 205. Remember, I always double this. $1.60 actually. The propensity of this thing, because I use the ATR, the higher of the 21 or the 44 ATR, whichever is higher. At the 44, they're saying 72 cents. The 21, it's saying 88 cents. So I'm looking at a dollar. This thing can move $1.70 easy. It's already moved $2 today alone. Look at that. And so I always double the ATR, because that tells me if I did a strangle, and I did a strangle at the 16 deltas. If I did a strangle around the 16 deltas, let's see, we'll go 13, because that's where the expected move. And this expected move would be, okay, we'll go out here to the 32. If I were to do this trade, okay, you're only getting 97, you're getting 1/10 the buying power. There's no way I would do that. But if I did this, it just shows you if this thing can move $2 a day or $1.70 a day, It's already telling you how much you can lose in heartbeat. I mean, it's already there for you. And this is 67 days out. It's already telling you that if this thing moved, I mean, you'd be getting crushed. If it jumped to the upside the next day, you'd be down $600. If it jumped to the downside, you'd be down $71. So there's definitely somebody believes this thing is going to go to the upside. I mean, without a doubt, they think that this thing is going to move. If it went from 15, so I see 15, 16. Yeah. So, I mean, you'd already be down. Even if you got $1 credit, you'd already be down. If it jumped up there to about 16, you'd already be down about 10% at a heartbeat. And that's just, I mean, that's just the nature of just I mean, this is just ridiculous because the deltas are close, but it just kind of tells you just how ridiculous Riot is. That's why I'm not into that. That, again, to me, that's like a meme stock. I'll call it the Trump stock. If we went where it's at 15 and we went 10 strikes up to 25, that's trading at 85 cents to the upside. So 85 as opposed to 9 cents to the downside. The upside skew is ridiculous. I mean, it's somebody's looking at this thing at least hitting $20. $5, you have 137% volatility over here. And so you have 120. So you're getting paid more on the downside, but somebody believes that this thing is going to jet because $10 out, you got 85 cents here, with 120% volatility. You go $10 to the downside, you're only paying 2 cents with 137. So you're getting paid more down here, but the problem is you're getting paid down there. Major problem is that you're so far out on the upside that if we were using deltas, 14 delta as opposed to 13 deltas, our delta skew, you're so far out that if you were to move these strikes around, because remember, every trade I get into, I always know that I'm going to adjust it. The other thing is you're only getting 99 cents for that particular trade on $9. And there's no sense in trying to make, if we tried to make this an iron condor, say a $3 iron condor, there's no sense in doing it because you wouldn't be making any money. It'd be 45 cents on $2.54. Or no, that's not worth it. Anyways, Riot's out of there. It just, is it worth it? Is the juice worth the squeeze? Tilray, marijuana, same thing. Same thing. Tilray, even though it's down and it's been dropping like a rock, same thing. Are you going to be getting paid this? The juice worth the squeeze? Let's check it out. We go out 39. Since this, we're going to go out 39. Yeah, there's nothing there. There's nothing in that. In terms of the granularity, there's no strikes on Tilray. It's a penny stock. Dang, look at what happened. Tilray is a penny stock. I remember that thing was trading way back, and everybody was saying, yeah, Tilray. That's a penny stock. Interesting. Anyways, or it's getting to penny stock territory. Wells Fargo, no, see, that's the thing. I'm looking for things that the green that goes up. ARK Invest, Cathie Wood. It's like a more gentler version of Riot of Bitcoin. Cathie Wood is Elon Musk's best friend because they used to do a lot of live streams together. And I used to watch those live streams just to see what's going on. Look at that. Same thing. Bitcoin, ARK Invest. It's going through the roof. And I think they were more than friends for a reason because I think Elon Musk just saved Cathie Wood's ass right now. The fact that he's in there, you best believe that has a big factor on these type of securities. Let's go and look at the volume. Are there any strikes? At 39 days out, I see no liquidity. There's barely nothing here in liquidity. Barely nothing. I don't see anything. Let's go out to the next month. That's December 20th. Yeah, Oh wait, December 20th. That's probably because I had the wrong one up there. That's why. Let's see. Is there any liquidity? I just had the wrong month. Okay, there we go. Now we're getting liquidity. Okay, cool. 16 Delta. 16 Delta. Is there anything to sell here? 1618. Getting 144 and $6. It's not enough. So we would be looking to see if possibly we could do a condor, but there's not enough there. Purely, even though you're getting 83%, 74 pop, $5 a day in theta, delta, you're a little bit short deltas, but it's not nothing. The gamma's a little high because that's 6 times your delta. So that thing can move on you. It can move. 140 to 148. If I did this, I'd be around the 145 and see if the market will come get me. Let's see what we got here. Curve. Analysis on the curve. Again, same thing as like Riot. Again, because this is like, if it jet to the upside overnight, you'd be down 275. If it jet down to the bottom, you'd only be down 117. So this thing, even though it's close to delta neutral, it's not totally delta neutral. It's close. Even though it's close. Oh no, now you're 2 deltas short. So oops. So we have to move this closer. Or deltas. So if we were getting closer to delta, 151 out of 570, it still is not worth it. We still want a little bit. If it were like $2 and that's 570, it would be worth the trade. This thing has more propensity to go down. Why? Why not? Look at what's happening. It's just been booming to the upside. So chances are this thing could pull back on you. Pulls back on you, wouldn't be prepared for it. This thing can move $2.80. Easily $2.80. Look at where it is, $2.90. Double your ATR. This is already about $3, and that's just today alone. That gap right there. So if this thing were to move on us, even if we'd had it with our long deltas, because now we're 3 deltas long, if we went from 57 to 54, we would be down $23. We'd be down on our, say, I mean, it's not taking that at 141. We would be down. What is that? A little over 10%. If we went to the upside from 57, we went to 60, we would definitely be down. We would be down, say if we went to the 60, we'd be down definitely about we'd be down 40, so that would be, what was that? 10, about 30%. And again, you would move your strikes to accommodate. So if it went up, or if it went up, you would be moving your 50 strike. Say if you moved your 50 strike to 52 or 51. Let's see, we went from 50. Say if we moved that buying power 570, 143. We move that, we get 20 cents over here, and we'd only knock our buying power down 10 cents. So that's not as bad. If we went from the 50, 143 to say the 50, and we got 570 buying power. So if we move this up to 3, we'd be at 207, which would be $60 up. It'd increase our buying power damn near $100 some dollars. So this is definitely, and that's if the market went up against us. Okay. So it's not like the best of trades. We do have 142, 149. If I did this, I would be trying to see if the market could get me at 146. It's not a lot, but I want to be paid for what I'm looking at is I'm looking for this thing to see how much it moves. And you could tell by if it's like 147, 141, and 147. If these numbers start getting wider or smaller, the 147 start getting wider and smaller, moving around, that means the stock will move. Chances are this thing will move against you. I always look at that. What's the worst that could happen? I don't look at anything but that. How bad could it get? Then I make the trade accordingly. Hold on for 1 sec. Yeah. Oh, hold on for. Oh, you say for Riot? Hold on for 1 sec. Yeah. You say, why not a directional? Yes, I could do a directional and Riot. And I'll show you which one. If, again, I'm looking for stuff I could sell. So I can't do strangles on these because of the fact that volatility or I can't do strangles because of the pricing on it. Because the first thing I do is I look for strangles. But what I'm gonna do is if I did directional, I would be doing butterflies, kind of like what we did in TLT. Because of the fact that Riot is through the roof, which means Bitcoin is through the roof. Let's go back to Riot, and I'll show you. I'm glad you asked that because that's great. That's an excellent question. You see how this thing has been skyrocketing up to the upside? What I would look like is I would look like volatility to come in. It looks like it wants to come in anyways over here. This thing has $1.60, I'd say $1.70 as according to the ATR right now. So if I did this, I would be looking at doing a butterfly, kind of like what the TLT butterfly. Okay. Seeing that this, in terms of directional, since it is just skyrocketed, I would say to myself, I mean, what is Bitcoin up? Like $5,000, $6,000 today? Let's go /BTC. Because Riot is a Bitcoin stock. It's up $6,400. Folks are anticipating $100,000 Bitcoin. They know it's going to get there. Okay. And that's just pure speculation. It's not like Bitcoin is worth anything. It's just really good speculative instrument. It's like a Beanie Baby, but a good Beanie Baby. Blockchain is Riot. Okay. Blockchain is important. That's the one I'm looking at, which is Riot. But Riot is a Bitcoin. It's basically an ETF of Bitcoin. That's what I call it. Not really an ETF. I should say a stock of Bitcoin. It's like a surrogate for Bitcoin. Knowing that that's the case, and keep in mind, a lot of this is pumped up. Why? Donald Trump. And anything that's speculative, I always say, it's like a balloon. Sooner or later, that balloon might pop. And if it did pop, look at that way back here. If some folks will call that resistance, now support. Look, like I said, gaps love to be filled. Well, if that's the case, why not do a butterfly on the downside? Because I'm a contrarian. I like to sell things. I like to go against the trend. I love it. So if I did that, and I'm glad you asked that because I would do it. Since the strangle, I would not do it as a strangle. I would do it more like a butterfly. Okay, which means that the market could go completely up. I don't care. It could go down. As long as it doesn't go down too far, I don't care. If it stays where it's at, I don't care. You're still making money. In other words, it's omnidirectional. And if I did something to the downside, what would I look at? I would look at, say, December 20th, because I don't. The butterflies are one of those trades you have to stay in longer than anything else. It's not like something you could adjust like a strangle because you have defined risk on it. Your risk is the protection you're paying. Remember when I was talking about the lawyer with P. Diddy's lawyer? That's basically what a butterfly is. It's like, and so I would center the butterfly to have the deltas. This is a 13% chance that it'll close down here, but it's a 26% chance that it will be touched before the end of the trade. If I did this, or I could do a ratio spread, which is like a butterfly with risk. It has, it's not defined risk. If I did a butterfly, I'd go 2-to-1. So it would be like for every one strike I go up, I go 2 strikes. Remember I was telling you about the lawyer? This red thing is P. Diddy. Think of that as P. Diddy or possibly Trump if Jack, what's the name, gets his way over there, the prosecutor. The lawyer that you want closer is the lawyer that's closer to the courtroom. This is the judge right here. The at the money strike where it's at trading at 15 right there. It's at 1533. That's the judge. Okay, that's the judge. You want to make sure that since this is the judge, you want to make sure, and this is the defendant, you want to make sure that the lawyer closest to the judge is closer to you than the lawyer that's not closest to the judge. When I say the lawyer, the 12 would be here. And since it's 11, 9 would be down here. So this lawyer, which is green, remember, green is protection. The defendant is the red. Okay, that's the defendant. And the lawyers are the green because they're protecting the red defendant. The lawyer closest to the judge, which is 12, because the judge is way up here, you want that closer to the defendant than the lawyer that's a ways away from the judge. Okay, so the thing is we're going to adjust this to get credit. This is only giving you $3, or man, they're saying 13 because the market's moving in your favor. I think it's coming down a little bit. So you're saying around, say 10 cents credit. The most that the thing of this, you could get 97 years because it's costing you 97 cents. That's in terms of the buying power, in terms of how much buying power this thing is going to cost you. This is how many years you could get, 97 years. You want to shave some of those years off, which is called your credit. Okay. So you've got the defendant in red. You've got this lawyer right here, this is like what's called the broken wing butterfly, which means that the lawyers, like if the lawyers were surrounding you like this, they're both closer to you, to the judge. Okay. The judge in the courtroom right here is at the money. Over here are your lawyers, green lawyer up here. You want credit to take off your sentence. You want credit. Now, this is really like, if both lawyers are next to you, chances are you're not going to be getting, you're not going to be, you only got 8 years that you have to do in the joint. But here's the thing, you're not getting any credit, no good time. You want credit. Even though the years might go up, you want credit. So the further this lawyer goes away from you, than the one closer to the judge, the more credit that you're going to get in time off. But you're only getting 3 years off of a 100-year sentence. So we want more credit. This lawyer is going to have to go away from you. So this is 3 times the distance of this guy. You get more years, but less credit. So it's not necessarily, I was thinking of a broken wing butterfly. So what do we do? Now remember, this has a 26% chance that this thing is going to get touched before the end of, in 39 days. What we're going to do is we're going to get closer to the judge, which means you're going to put more risk on. Okay, more risk. We're going to get closer to the judge. Okay, 12-10. So you got 91, but now you're getting 10 years off you could get close to 17 years off or 17 months off of your prison sentence. It is a little more risky. It is much more risky because remember, Riot can move. This is thinking directional. Riot could easily move. As I said, now it's already moved $2.46. I was saying 160 or 170. It's already moved. What? That's 20%. So it could easily move that in a heartbeat. It's moved over our double ATR. So if we did this trade and did this as, if we were to try to get 17 cents of credit, which is way out of the wheelhouse. I mean, the most we could ever get in credit just by looking at this is 14 cents. So say we could get, we're trying to get 14 cents of credit. Say 14 cents of credit, which chances are you aren't because it's telling you it's a debit trade. This basically, again, it's moving all over the place right now. So it's kind of hard to do that. But say what we're trying to do is get years off of what we'd be getting 86 years because we're getting 14 years of credit. Because we're closer to the courtroom, we're closer to the judge. So if we did that, and again, this thing is, the option prices are moving like crazy. This is what our butterfly looks like. If we did this, and we don't care, as long as it doesn't go too far down, then we don't care. As long as it goes up, we don't care how far up it goes. We can make it a free trade. But if it goes down and it goes against us, if it went down to the 11, that would be like totally against us on this. And again, this thing can move $2. So if it went down here $2, we don't care if I'm saying $2 a day before December 20th. So I mean, and that's what I anticipate. If it went down here to the 11 strike, that's close to where you're basically totally break even. You are definitely off the mountain because remember you're down significantly off the mountain. But we'll say that's your break even at 11. That's when okay, judge, I confess, there's nothing I can do. We'll say at 11. If we go to the chart at 11, that's around right down here. That's significantly. So chances are, again, this thing can move. Remember, in just a week, it already moved off of $10 in a week. It's like in 4 days. 4 days, it's moved from $10. It's moved up to $15 in 4 days. So clearly this thing can move like there's none other. So it could actually move against you. Not saying it will, but more than likely, again, this trade is Riot is a blockchain, speculative. It's damn near up 20%. It's something that will move fast and against you. Why? 2 words: Donald Trump, or we should say Elon Musk or Cathie Wood. It's just, that's where things are at. It's a very speculative situation right now. But if it got into your wheelhouse, you would be paying, you would be getting, you would be, you could easily make in your wheelhouse, if you pin this thing and it wasn't a free trade and you just pegged it like and hit it just right, you'd be making around $1.14. You can make $1.14 on 86 cents. But the credits are ridiculous because you're getting no credit, but you're only getting $6 credit in the mid. But there's no way you're going to get that because it's not trading. The $14 or $13 credit's not trading right now. But it's moving around crazy enough that I'm gonna try it. Let's just check the liquidity on the strikes, and that's probably why you're not seeing the. Yeah, we've got all kinds of liquidity. Look at that. Look at the contracts. Yeah, so I'm just crazy like that. So I'm gonna try it. But when you said directional, I'm thinking of downside. And then I'm just going to adjust this as the market comes in. You more than likely will see the $6 credit go up. And then I'll look at that. Now we're at $10 by 20, $10 credit by $20 by now $17 credit. Like I said, this thing is just moving. It's moving. You could tell by this. Okay, it's just your mid. It's just ridiculous. It's just moving everywhere. Now it's $2. $6 is your mid. So, we'll just do that. Just because markets are still moving and they're getting, they're just going crazy. That's what I did in that TLT because I don't mind getting that kind of, the risk is, is minimal compared to, because, it's a crazy stock. It's up damn near 20%. But yeah, so if I did that, that's the directional, contrarian directional, because I love contrarian trades. I always look at at doing the opposite of whatever everybody else is doing because you get more juice for the squeeze. Now, if I wanted to do directional on ARK Invest, which is the same thing as Riot, instead of going 2 contracts in Riot, I could do both securities the same way. I could do the same thing with ARK Invest. That way, I'm not doing 2 separate, like 2 contracts in Riot or 2 contracts in ARK Invest. Those things are basically 1-to-1 beta. They're basically trading. I mean, I should say they're trading correlated, almost the exact same. Those 2 are dang near 100% correlated, close to. Okay. They got Elise Stefanik. That's so interesting that Trump got her as UN ambassador. Remember, she was the one who got the sister fired over there at the college. It's definitely it's going to be a real interesting 4 years. But I'll do that on the other broadcast. I'll talk about that on the other channel. It's going to be a real interesting 4 years. Now, those are the ones that we could sell in terms of keep in mind in terms of volatility or butterflies. If I wanted to do ARK Invest, I could do the same thing with ARK Invest, doing the butterfly. So I would see, okay, if we were to do ARK Invest, let's get rid of, because I don't think I have any positions in ARK Invest. I was just looking at that. Yeah. Okay, so ARK Invest is out of it, or do I? Yeah. SMH is the one that I got one on. And I'm gonna move those credits down as the market moves around and see later if we could get filled on those. EEM is nothing. Okay, that is going nowhere. So okay, and let's see. And XSP, I don't care because that's basically a dead trade. If it goes down, if this market goes down a little bit, then we'll see if we can move that strike. But I'm not going to move that strike for just $6 a credit. Doesn't make sense. I tried to move it for 22 last week, but it never got filled. So we'll see if we can move it for $6. If it gets filled, so be it. If it doesn't, so be it. VIX, I don't care because that's a dead trade. I don't see VIX going back up. I may close it here soon because it's 48 cents. The next up day, even though it's up 38 cents today, the next, if VIX gets to around 16, I'll go ahead and close it because that, I don't want that trade any longer. Um, because it's not, I don't see a market going down anytime soon. Again, this is the Trump effect. But if we did ARK Invest the same way, and we do ARK Invest, go to December 20, go down to our, okay, we're at the 20 deltas, so we would go 52, 50, 53, butterfly. Now we can expand these wings, for a butterfly, but I'm just kind of showing you, I'm just showing you the, just the nature of how the butterfly, because I'm getting contrarian on it. If I said 52, doubled the, let me double the strikes. Okay, 52. Yeah. So there we go. 50, 51, 53, which, wait. There's no way you're going to get a max profit of $5,000 on a $100 loss. That doesn't make sense. On $100 credit. Yeah, that's because of credit. Okay, what are we looking at? Oh, that's why. We moved the strikes. I'm sorry. I meant to move the strikes down. So if we did this, I did that wrong. So 50, yeah, 52, 50, 49. Okay. So yeah, because we're at that, that's the 21. Okay, I did that wrong. I meant to do the quantity and I did the strikes. Quantity, there we go. 76 to make a 124. There we go. Makes sense. So if this thing went down, could it go down to the 51 strike? It could get down there 51 overnight. Easily. It could get down there overnight to the 51 strike. But again, this is, instead of doing 2 contracts, I would even bring this down to the 49, say 49 strike. If I did this, let's see, you have 83% chance of making the $11, an 83% chance of making that $11. You're getting paid theta, $35 a day in theta. So it's all, if you put this trade on, it's a lot closer. It's a 21-cent credit, but look at the 21 to 12. So it's, 53 credit is the highest you could get. So this is definitely widespread between a 11 cents or 10-cent debit and a 52 credit. That's a huge spread for this particular trade. Being that that's the case, I would increase my credits up to see if that market would fill me. Again, it's the same thing as the other one, as the Bitcoin. So if I wanted to do this trade, if I wanted to do 2 riots, I would do 1 riot and 1 ARK Invest, kind of like an arbitrage almost. And see if and so therefore it's like having 2 contracts. This, if it went down and went against you, because the green lawyer is the one that's at the end. If it got down all the way to this green lawyer at the bottom, the one furthest away from the judge, you'd be down. Okay, let's see, not at that lawyer. We'd be getting out. We'd be down. If it went down to the 50, you'd be down $28 on that move, maybe $30. You would definitely be down. The thing is this, you would close half of this trade and just use the other half and just cross your fingers, basically. But you would definitely the expected of, if it closed there, you'd only make $3, which is not terrible. Your credits are going down right now because it looks like that market is going back down. It's already moved 7% on you. But if I did this, I would be looking at that in terms of this trade. I would want to get that credit back up, because I would definitely do this at that 21, even because now you're at a 7 by 33 credit, 7 debit to 33 credit. I'd even move this market to like 24 or 25 cents just to see if it would fill. You're spending 75 cents to make 125. We're going to do this. I don't mind that. Even though that you're getting paid for the problem, is what I'm saying. So if the market went down and it fell like crazy, because remember, this thing can easily move $3 on you, because today alone is 386, and I'm saying it could easily move $3 a day on you. We're already over that easily. So, and that's why I always double the ATR. If we did that from where it's at right now from 57 to 54, you're still okay. So it could easily get down to $51, $52, which means, you're not going to lose terribly, but, you've been down 20 some, 25, 20, $30, whatever. But anyways, I'm going to put that one on just for the sake of doing it. Okay. So we got that butterfly. We got two butterflies. That's a directional. Arc is directional. Riot is directional, and directional to the downside. Okay. Directional to the downside. And Riot, I didn't give you the statistics on Riot on that particular trade. That one, you're getting 93% chance of making 50% or making $7, which is nothing. It's just telling you that, you're getting paid a lot for the problem. You've got 38 cents a day you could be making money as long as it doesn't, as long as it doesn't collapse. Volatility stays up with you. You are long delta, of course, because the shorts are underneath it. And you got 76% chance of making a penny or more on the trade that we just did. So those two. So in terms of in terms of trades, we've got SMH Iron Condor we're selling. And let's take a look at this. The statistics here. That SMH trade was the one we were in. This, it should be giving you some more because it's fallen volatility. So it's 174 by 185. So we could start bringing that back a little bit. Remember, I did it ridiculously. I put it out there just to see, in terms of let's see what we got here. Because remember, this, if we went down to 180, remember, I'd have to move these strikes. These are $5 strikes. So I would have to move them to $10. And if I had to move these strikes, how much money would I be getting for moving these strikes? And how much will it increase the buying power? Because if I have to move this and I'm only getting $100 to move the strikes and the buying power doubles, that means that that's not really a good trade. So I'm going to sit on this for a minute just to see if, if it will feel cool, if it won't, cool. Because I had it at 184. Let's say, for instance, we're at 185 credit, even though this not trading there yet. If this thing went against me and I had to move the 230, we're at 315 buying power, and I had to move the 230 to the 235 strike. Okay, let's just let me do this. Let me just duplicate the order so that way you could see what I'm talking about. Because every trade I get into, the first thing I know is I'm going to, wait a minute, not replace. I know that every trade I get into, I'm going to have to adjust. So I always have to look at how much is it going to cost me to adjust. So if I did this trade and we got 314 and how much money they're holding out on 186, which I'm not mad at. If I had to move this to the 235, we've damn near doubled our buying power, and we only got $40 in terms, or no, we got $80 in terms, so we've got to double our buying power. We only got 80 cents more to double the buying power. Okay. And so therefore, again, I always look at that because I always tell myself, if I'm going to adjust this, I want to be paid for the adjustment. That's why strangles are much better than iron condors. Because iron condor, you have that lawyer. You've got two defendants and you've got two lawyers protecting them, and the judge is right in the middle. So you're going to be paying, but you want to get paid for that. Even though you got, again, it's a 68% chance that this thing will give you 50% thing is, probability of profit is a lot less than I'd really like it. So you're not getting paid for the problem. Not major. So that's why I kept it up something ridiculous to see if it'll get up to that higher credit to pay you for the problem. The other trades we already went through. What else? We already closed FXI for a tiny profit for like 30%. We closed that so we made 30% on FXI. Cool deal. Took a few weeks, maybe 3 weeks, I think, 2-3 weeks, but we're out. EEM, I'm not seeing anything on EEM yet. We're 6 short. We're getting paid 92 cents a day. So EEM is going to have to close here shortly. That closes Friday. XSP is a dead trade. That's the other one. The X trade, the strangle. We're sitting on our hands in that. Because the reason X is going against us is not because we're delta neutral. It's just volatility. Volatility is killing us. Basically we're getting paid $7 a day, but the volatility in U.S. steel is cutting down that $7 from us. And then we're losing on gamma as well. Even though it didn't move, we're still, gamma's messing us up a little bit because of the fact, of course, so that's why we're looking at, so basically that's doing nothing. X is doing nothing. That's a strangle. So we're just going to sit on our hands in that because we're not in trouble delta wise. That's the thing. I always look at our deltas to say, are we in trouble with deltas? XSP is a dead trade. SCMI, again, we're delta neutral. And I think we did that was a strangle as well. So I'm not going to freak on SCMI. I'm looking at the buying power, and let's see, trade price. The CVAR should be. That's what I'm kind of curious about. Let me see if we go and let's see, modules trade price. Let me see if I can move and put let's see, I was going to go with CVAR, put the CVAR up there. There's positions, Delta Theta Vega Gamma P&L. We don't need the pop or anything else in there. No, I was going to maybe net liquidity. Let's see, because I know they have CVAR. I think they have CVAR on that. Might have to go into the cost of the capital requirements. I didn't think they'd have that on there. Their implied option implied. P&L close price, day P&L close price. No, I don't want that. I thought I had it on there, but they don't. Okay, no worries. Because we already know what the cost of the trade is. Anyways, I was just looking to see if I could display it up there. But anyways, I'm not going to freak because I was going to look. Let's see if I have anything on there. Okay, no, because I wanted to see the worst case scenario per trade, but I have to go through the capital requirement thing on the thing. But anyways, okay. So anyways, I'm not gonna trip. I was just looking to see if I could do it. So anyways, what we got here is now buying volatility. Since everything is lower right now, what if market crashes? Well, we want to get paid for that market crash. So if it did crash on us, we could go again. I could go SPY, but I don't like doing that. I like to use either SPX or XSP for a calendar. Now remember, the calendar we're in on XSP is going against us. That's a dead trade. That was an election hype trade, just to see if, hey, if Donald Trump lost, then that trade would have been perfect. But he won, so it wasn't, because volatility went down like crazy and the markets flew up to the upside. Oh, well, so what? It was speculative. Now, if I wanted to do the same thing in terms of calendar, again, I like using indexes because I don't like being assigned, on calendar trades. Assignments are terrible. It's not the end of the world, but we start with IV index, and this is the IV index that are the low. Look at that, minus 0.8% IV index. That's how much? That's how much it fell. 15% IV index. Look at IV rank. That's the one I'm looking at. IV rank. IV ranks. Look at how low these IV ranks are. Okay, low IV ranks. Uber is literally on the floor. Again, I don't like doing calendar trades, but look at Uber. IV index is 30 and it's gone up, so I would never do Uber in terms of this calendar. But I love indexes. Indexes, i.e. being SPX, XSP, NDX, stuff like that. I've never really done calendars on NDX. If I were to do one on that, I would rather do it on, if I did that kind of calendar, I would rather do it on XSP. These stocks, I just don't like the assignment risk that you have doing like diagonals and calendars, even though you could do it and it's not like the end of the world. It's just, I like something that's very liquid that I could do calendar trades in. SPX is perfect because volatility. If we looked at SPX, it's like literally has, the IV rank is 14. and the IV index is 4. I mean, that's just, you can't ask for anything better. If you don't want to spend that kind of money, you can't do the spiders, the SPY. It's liquid. You just got to be, on your game in terms of if this thing goes against you. It's going to cost you a lot less to do a calendar, much less. So if we did that, you know, it'd be like remember, these are like butterflies. These are trades you don't want to be in too long. Get in, get out. So if we did a calendar, say if we wanted to do one, we could go out 9 days. Again, it's not like the 60 days because this is speculative. We want to be in and out. It should have gang loads of liquidity because this is the spiders. I should be seeing gang loads. If I did a 9-day, where's my trade? There we go. Looking for it to populate. So if we went down, let's say this thing has the ability of spiders being, again, very liquid, SPX. It could move $8 one way or the other. Easily, it could move $8. If we look at our charts, we want this thing to move. It has the ability to move. This says $5. We'll say 10. Okay, it's actually $6 is the largest of the two ATRs. This thing could easily move $6 one way or the other. So it could go from $5.99 to $5.93, or I should say, let's say 6,000 to $5.93, or it could go 6,000 to or 607, from $600 to 607. I'm thinking SPX. So we know that thing can move. That's our wheelhouse that we want it. So if we were here at 600, 593 is cool. That's 23 deltas, which means it has a 46% chance of getting down there. Or if we equally went to the upside, it could get to, say, 605. That's closer to 607, maybe 610. It's got, in order to get there, it could easily, to get there in terms of our delta, we'll say 605. It's got a 62% chance. If it got to 610, it only has a 36% chance to get to 610. I don't mind that. 36% chance to get to that 18 delta, and to get to this, say, 15 delta, to get to that, to get $3 away, $10 away, it's a 36% chance. To get $10 to the downside, it's a 46% chance. I don't mind that. From 600 to 590 is a 46, or is a 46. You double that. Again, you double that delta. From here to 610, it's only a 36. So I don't mind. You got a bigger chance of going down than going up because it's gone up so fast and so hard. So if I were to take this trade as a calendar to the downside, I would say, hey, what if we sold this one right here, which is the 590 down there on November 20th, and we bought, say, a few days later, say we give it 5 days, so we bought the 20th. Well, we've only got 7 days, so we've got, from the 39.46, so it's like 7 days. So we've got a 7-day calendar. What if we bought the 590 down there? How much would that cost? So that trade would cost us about $400. Am I willing to get, because you're only making $10 a day on it. You are 12 deltas, so every dollar it goes up, you're going to lose $12. Am I confident that I would like to get in that trade, even though I have a better chance of this thing going down than going up in terms of pricing? I make more going down price than it going up. Do I want to spend $400 on that? Am I that crazy or am I that confident? Neither. I'm neither crazy nor confident of that particular trade. So I would probably do it with XSP because I would probably have, more, a better chance to, with a lot less money, because of the fact that it would, a better chance, a lot less money, because of the fact that this thing would more than likely have strikes in between, because all I have is 7 days. I wanted to do this with 4 days between strikes, not 7. I'm not getting paid enough. In other words, I'm not getting paid for the one I'm selling for the one that I'm buying. The one I'm selling, if we look at the one I'm selling, which is the December 20th, am I selling the 20th? Should be selling the 20th. No, November, excuse me. Oh, I went to December 27. That's why. Okay, I had the wrong month. My bad. Let's get rid of that. That's why it's costing that much. Let's get rid of that strike. I'm looking at December. Dang it. My bad, Brother Will. I was going to say there should be more strikes between those. My bad. Let's delete that leg. It's November 27th. I went to December. That's why it's costing all that money. Now, November 20th there we go. So we go 1, 2, 3, 4. So we'll say the November 20th. We'll say we'll go out instead of 9 days, 11. We'll go 3 days out, November 25th. Now it's making sense. So that means that Friday, that strike, we'll go there. We'll go with the $5.99. There we go. I was twisting you up because I was like, man, this is crazy. Anyways, okay, $68. You get paid $4 a day. You're willing to lose like $69. A gamble. It is a gamble. That this thing can actually, but if it goes down, you get paid in volatility. You get, your volatility goes up, so you're going to be getting paid as it goes down. What are you going to get paid in volatility? Let's check it out. Let's move the Vega down a little bit because remember we're buying volatility. So you're getting paid $10 a day. Should this thing, for each percentage it goes up in volatility. Remember, when markets fall, volatility goes up. For each percentage volatility goes up, then for each point, for each the dollar per se, point of volatility that goes up. For each point it goes up, you're getting paid $10. You're getting paid $10. So that's not bad. You're getting paid $4 a day to hold this. You are long deltas, remember. And remember, this has, in terms of probability, it has, you've got, am I buying this? Yeah, okay. So you had, in terms of where that market was at, you had a better chance. Let's go back to your November. If it went down to the 590, you had a 46% chance. A 46% chance of going down than the 18% chance going up, or the 36% chance of going to the 610 strike. So, it's, the only problem with that is everybody believes this thing is going to go to the 610. Why? Look at how many contracts you have up here. There's 280 folks that believe that in that 36% chance, as opposed to 167 folks that believe in that 46% chance. So more folks are saying, hey, this thing is going to go up through the roof to the 610. And they may be completely right. Because but I'm thinking that this is a big number. We'll take a chance. 69 cents debit. We'll just monitor it. Now, how many days do we have between? We have November. We've got 1, 2, 3. If we did this for Monday and moved this trade instead of the 25 to the 29, it's going to cost us a little bit more. We've got 14% volatility here and 13. So the volatilities are close. It's not like there's going to be a volatility crush, because that's the thing that will kill you. Remember, you get paid $10 a day for every point the volatility goes up. So you don't want it going down because you get crushed by $10. That's our Vega, the volatility. So we're looking at, to look at that trade, and I kind of like this. To look at that trade, I'm looking at, again, this is speculative. This is directional. This is not an income trade. This is just, it is income because you're getting paid per day, but it is speculative because you're taking a chance on direction and volatility. So let's take a look and see if we can get some more days. Hold on. And remember, in the XSP trade that's going against us, and it's massively going against us. Remember, it was an election day trade. Remember when I put it on for $1.83, and the second day it went against us, I went and got $62 of that back. So now it's only costing $122. I want the same probabilities, and we still have a couple of days left on that trade to where we could still move strikes around. Here's what I mean. even though I'm down on it, an XSP, that speculative trade, we still got a couple of days left before we say no mas like Roberto Duran and just give it up. We've got 2 more days. So if this market went and fell, I could actually still move that strike, even though chances are you wouldn't be making no money on it because the markets are up. But the more days I won't say you should have a lot of days in between. It's just that if I have enough chance of, if we put that on today, we still have a few days in between. That's November 20th. We still have a few days that we can move these expirations closer and closer to the 25 expiration should this market go against us. So that means that we're cutting that $66 price, even though that it's it might be going against us. We're cutting that down. We might be able to cut it to $30 should it go against us, and the trade not go in our favor. The key is every day that you go by, you're making close to $4. Should the market go in your favor, you could still. That means that you could continue to keep moving these strikes closer and closer, which means that's even better for you, for the fact that that you have more time and more and you're getting paid more to move those strikes. So let's go to move that expiration from the 25th. Let's go to the 28th and see how much it'll cost you. Okay, it'll cost you 117. Now we're looking at something 117. Do I really want to spend that? You do have more days. You're getting paid $5 a day. So you're getting $1 a day more, and you have a little extra time to move these strikes. You're paying for the time, basically. You're paying for the time. That's all it is. So thing is it almost doubled the cost of your trade. It doubled the cost of your trade. Should this thing go against you, you do have more time to move this from the 20 to the 28. It's giving you more time to be right. Or the 29th. I think I have it on the 29th. It's giving you more time, for this thing to go in your favor. That's okay. That's 9. That's like 9 days in between strikes. So you do have. I mean, it's like, are we ready to spend double the amount? You are getting a few days more. You're getting paid $5 a day, about $5.50 a day, and the thing is volatility is basically it can go up. You're getting paid $16 should volatility go in your way. I don't mind this. I don't mind spending this. The only thing is I'm going to try to go on the lower side. Let's see. I'm going to start at 113. Should this market go down, then you'll more than likely get the 113. So I'll start at 113 and move it up from there because I don't want to spend that much. So since I'm buying volatility, I lowered the cost of what I want to buy it for. So we'll see about this. We'll see. And so let's see. We've got SPY. Okay, we got one spider trade. We got a few trades on. And as the day goes by, I'm going to start moving the strikes around. From ARK Invest and the others, I'm going to move those strikes because I got them ridiculously wide. But I'm going to see what happens and see if the closer that the market gets closer to the price I want, then I'm going to come down in my price, or I'll come up in my price. But I'm going to sit in the wheelhouse. So the closer it gets, right now I'm ridiculously cheap on SPY. I want to get it for one. I want to buy it for 113. They're saying no, we're selling it to you for 117. If the market starts moving in our favor a little bit, whereas the spider goes down in price, chances are we'll get filled in all these trades. Because right now, markets are so well out of bounds because of the speculation. Because it's a Trump effect. As things start to settle down midday, they might be thinking, okay, then I'll start coming up on my prices and coming down on what I want to sell it for, like the ARK and the Riot. I'll come down on my credits a little bit as they're coming up in price. And, chances are we'll meet in the middle. Chances are there will be a meeting of the minds. The SMH trade, even though I got a ridiculous credit out there, I'm just looking at it and I'm just sitting on that to see what will happen. Because, again, that was moving everywhere for a minute. even though markets have settled, I'm just going to do that just to see what happens. Just kind of getting in the wheelhouse. Anyways, there, Brother Will, that's, we got a few trades on today. We were able to take some profit on that FXI because I didn't want to stay out there too long on FXI, about 30% on that. So, and doing that, just kind of giving you an idea. And yes, we do have some directional trades in that. The two directional ones, which I'm not freaking on. It is what it is. I'm just going to sit and wait. The XSP is a dead trade. When I say dead trade, chances are it won't go into our wheelhouse, but if it does, cool. If it don't, it don't. I'm not going to freak on that just yet. The trades that we have that are on, that's the only one. The other one was the SCM, not the SCMI. It was the X, the X trade. X is the only one. Of course, we're delta neutral in that. The only thing that's hurting us in that is volatility. Is the fact we're losing on Vega, so it must be getting more volatile on X. Which I'm not freaked on because we are still in the deltas. Okay, we're still between. We're still on top of that mountain. So I'm not totally scared of that strangle because we're still, as long as we stay on that mountain, I'm not gonna cry. I want it to be on that top of that mountain. And the fact that it's still there, even though that, theoretically we're getting hurt, it's just because of Vega, because of volatility. So I'm not, that trade is what it is. It is what it is. Anyways, on top of that, I think we're good. So we do have a lot of trades on for today. One trade off for today. Anyways, hopefully that helps. And hopefully you've been watching some of those option videos that I've been telling you about. The Theo trade, the Sheridan mentoring, options mentor. They got a lot of cool ideas just to give you ideas to say, okay, this is what these guys are doing. I'm not saying do the same thing. I'm just saying it just gives you ideas. And that's all we need is just, and definitely Tastyworks. For buying volatility, Sheridan mentoring, and options mentor. They used to work together, Mark and Dan. And I remember running into Dan out here in California. He's funny. It was fun. He has me laughing. That's for option buying. For option selling, Theo trade hands down because that's what they specialized in, is option selling. For a little bit of both, just to get kind of an idea, especially on Mondays, Theo trade. Brandon on Mondays and Don on Fridays. If you want to, like, watching Brandon on Mondays, Don on Wednesday and Fridays, but mostly watching Brandon because that is mostly for just the whole option analysis, just to see where markets are going. They're very good in their analysis. They're not 100%, but they are very, very good. I really enjoy their analysis. But that should give you some ideas. So we got a few trades on today. And again, the ones that I'm selling credit, the Riot and the ARK, I'm going to move my credit down as the market goes toward us because it's still out there. On the ones that we're buying, we're going to move the price up. Okay, this is something else. I don't care about that. The ones we're buying, we're going to move the price up as the market comes down on us. Should it? Then that's that SPY trade. Again, we don't want to stay in that too long because that, we don't want to, I don't like assignments. That's a simple calendar trade. If it comes down in our wheelhouse, cool deal. If it don't, we're out. The speculative. Those are strictly directional trades. Anyways, cool. All right, Brother Will, I'll talk to you. Take care.